Hi everyone, my name's PK, and here I have Tim Staker-Gunn, who's a valuer for a decade. I've never had a valuer on my platform before, so in this episode, we'll talk about the sort of 5 to 10 things that you really need to know because they could cause your property to either drop in value or rise in value, be worth more in the valuer's eyes. It's incredibly important stuff. Stick around for all of these 5 to 10 aspects that a valuer looks at so that you can capitalize or at least not burn yourself by ignoring them. Tim, thank you so much for coming on the show. And yeah, I really appreciate it.
No problem at all, PK, and hello to everyone out there.
Maybe we'll just start by, for people who don't really know what a valuer is or they don't really fully appreciate the role of a valuation company in the property market, like what is it that you guys do?
So, a property valuer takes a snapshot of your property or business, and it will tell if you're going for a mortgage, it will tell the bank what it is. So, if you just have a small standalone house, we'll do how big the land is, how big the property is, and also what are the legal components. So, we'll talk about the certificate of title, and will tell the bank or any lending institution what are the risks associated with this property? Should they lend on the properties? So if you're wanting to refinance or just say purchase a property, you will get a valuation done at some point. And that's where someone like myself comes in and has a look.
Yeah, and I think it's incredibly important because whether it's buying for the right price or selling for the right price or having it revalued for the price that you actually want so that you can take equity and do something with that, it's really good to kind of put on the lens of a valuer and see what they're seeing so that you can reverse engineer what actually is good and buy properties or make your property
Mm.
suitable. So I mean, let's get into it. Like let's maybe start with the negatives. What's like the first negative, or I'll let you take the baton if you want to run through the five. What are the risks or the negative things that people need to watch out for when purchasing a property, or at least what valuers look at?
That's a good question. There's a lot of risk, and let's just maybe just go for houses instead of apartments, just this little part of it. So my job is to look at the risks and show the bank what could be bad if it had to resell. So one of the main things that we look at is train lines. It sounds really weird, but if you're within a certain meterage of a train line, banks still see that as a as a potentially large risk. So it may be great that you've got a house or an apartment, you're close to public transport, but if you're in 50 square meters, so after 10 years of having that house, so not 50 square meters, the direct 50 meters or 100 meters or 200 meters, you might get a lot of reverberations in the house and in the concrete and the foundations, and that could actually quite negative to the house overall. So that's one of them.
Can I just interject
Essential,
because I'm going to be super curious about each of them.
of course.
You mentioned 50, 100, 200. Is it subjective, or do different councils or different states have a different kind of line in the sand? Like in this area beyond 100, it's okay, or in this area beyond 200, it's okay. Like, how do we make that decision?
It's a really good question. So it's really dependent upon the bank and maybe the Australian Property Institute or a lender that has their own set of instructions and risks. So if you have a what I would say is a general blanket rule, and I can't speak for every lending institution, if you're within 50 to 100 square meters, that's a red flag. That is, it's going to be hard to resell.
Got it. All right. Well, that's a quick tip right there, guys. I mean, be on the safe side and maybe
Mm.
by 150 meters away or 200
Hey,
meters
then,
away.
then we're good. Then you're good.
Yeah, I mean, within 200 meters, it's too close anyway. I mean, you've got all of this like noise pollution, high decibel readings. So I generally don't recommend you buy close to that anyway. I mean, is there exceptions to these rules? For example, if a house is super close to a train station or a train line, but it's like a commercial precinct and they've rezoned that, so now you can demolish the house and build, I don't know, four townhouses or an apartment block. I mean, I I know that there's a feasibility study to do, but regardless of the zoning, is that kind of meterage rule still constant?
That's a really good question. So if you have a bunch of apartments right near a train line, and this may, my example may, some your Victorian listeners may know this. South Yarra, there's a train line, and within a block away, there's a place called Caroline Street where there's probably about a dozen high-rise apartments. So if we were looking at an apartment on the ground floor, 50 square meters away from the train line, that will most likely trigger a risk rating. However, if it's on the 20th floor, you're not going to be really affected by it.
Yeah.
You're not going to hear it at all. You're probably not going to get any reverberations. So yeah, it really depends the height you have and how far away you have, and it's yeah dependent upon each lending institution's criteria.
Right. And I've seen people get this wrong because they sometimes put in Google Maps like how long it takes to walk or drive from their house to the train station or to the train line. But of course, to drive there may be a longer distance, but as the bird flies, so to speak, it could be
Yeah,
within 100 meters. So it's very important to use that, like, that sort of measuring tool that you have in Google.
yeah.
Not the direction, but just that ruler. I think that's a good sense check to start with. That's a really good one. I think I knew that one, but I didn't know some of that nuance around that. So I learned something. Thanks, Tim. What's up next?
Just going on maybe potential noise pollution as well. Major highways. Like you may think, hey, it's really good. Hey, I can get out of my driveway. I drive around the block and I'm on a major freeway, going to work or going to the city. But that noise is going to be a risk rating without a doubt. So banks will identify that. And not everyone wants to live right by a major freeway or a major road with a lot of traffic. So tying in with the train line, that's probably the next one that I would recommend that people look how far away you are from a major road or a major highway.
Yeah. And I think one of the gotchas in that one that I've seen people make the mistake is where, you have that freeway or the highway, and then they have those big walls that prevent the sound from going. And then behind that wall is that residential area, and there might be like this little cul-de-sac, and it's kind of like unassuming and nondescript, and people think it's actually a safe neighborhood and quiet. Well, it
Yeah.
might be all those things, but it's like literally 20 meters on the other side of this big wall and highway. So even if no noise is coming through, I would imagine because of that wall, still a valuer would think about that or penalize that to some extent. Is that a right statement?
Yeah, that's correct. Any half decent valuer who's done their due diligence would absolutely identify how far the highway is from the property. And if to say if it's a major highway, 20 meters, that would most, I don't want to speak for every valuer, but 99.9% would have to be identified.
Yeah, yeah, no, that's a great call. And I forgot to mention at the start, everyone who's watching or listening, none of this is, of course, financial advice, neither from Tim or nor myself. So please take it with that in that light. But it is pretty cool information. So so stick around. Number three, what are we up to now?
Uh, Mainly essential repairs. So this is often, how do I put this? It's really important if you're refinancing or buying, you have to look at the essential repairs. So I've been to properties where you go in there and there's no bathroom and the kitchen is not really usable. So you've got to think, could I rent this out? Could this be rented on realestate.com? And if it's not, then that's going to really impact the value of the property. So you really have to make sure that it's a livable condition.
Mhm.
And if not, sometimes I've had people who are doing renovations and they need to get a thing for finance to keep it going, and often we can't value it,
Yeah.
or if it's not a livable condition. So people really if you see a renovator's dream, I would just think about it over a cup of tea before you
Yeah,
sign a
right.
contract. That's all.
Right. No, that's a good call. And I suppose people could take advantage in a good way of that as well, where let's say there's no kitchen in a house because of
Mm.
whatever reason, it was old, original condition, the previous owner, demolished it and ran out of funds and couldn't put a new one or bathroom or whatever the case may be. If people can access funds from wherever, then is that a good opportunity to say, okay, well, no one can really value this property, not least a good valuer. Let me use my own funds, cash or wherever I have money from, to actually renovate this property and then get a valuer in, and then you're manufacturing a lot of value, a lot of equity through sweat, through basically sweat equity, manufacturing value through your own renovation. Have you valued lots of properties like that?
Do you mean where someone's got a property and they're like, I can't rent it out and it's pretty run down and they put their own money into it and that?
Yeah, like have you
Yeah.
ever come across a property where you're like, oh, like you just mentioned before, like you're like, oh, I can't really value this, so I'm gonna really value this very low because it's not in livable condition and you can't really rent it. And then like 3 months later, you value the same house, and someone's done this
Mm.
like really spick renovation, and you're like, well, I would have valued it at, I'm just making this up, 300K 3 months ago, but now
Yeah.
look at it, it looks great. I'm gonna give it 500K. Whereas the person only spent like 50K on it. Have you come across instances like that?
Yeah, I have. And uh, I'll just say, if you want to get a evaluation, make sure your house is nice and presentable. It makes our life so much difficult if it's half complete. You're like, oh, who's going to buy this?
Yeah.
So yeah, if you the example that you provided is absolutely correct. So people, they could put in a IKEA kitchen and bathroom, and that could cost them, throwing a number out there, 20, 30 grand. But, you know, if it's all done, a value could come and go. Well, it's quite comparable. It's a new kitchen, new bathroom compared to the place across the road, which has got a 5-year-old bathroom. Looks a lot nicer, and the value would, you would think it would without doubt go up.
Right. Cool. That's good to know. What's number four?
Um, this is for apartments, and this is something that people really do not know of and understand. It's the 50 square meter rule.
Okay.
So banks are generally hesitant to lend out on things that are less than 50 square meters. So that is a risk. Um, so if that it could be just 40 square meters of living and then 5 square meter balcony. It's not that's very prevalent in Melbourne. I can't, sorry, Victoria, I can't speak for the rest of Australia. Uh, but banks are very hesitant. They've got each bank is very different, but they may not, you know, if you want to purchase a property that's less than 50 square meters, you may find quite a bit of difficulty getting a loan, to be honest, because the bank will go, "Yeah, if you default, we're going to find it really hard to resell this on."
Right. And is that the case as well for like not one bedroom apartments, but like studio apartments or student kind of boarding houses or like small studios? Is it a similar principle, even if they're above
Yeah.
50 square meters or not really?
Um, yes and no. So you've asked me two questions. So
Yeah, yeah.
the 50 square meters, if it's considered a studio, often if it's considered a studio, it's less than 50 square meters.
hmm
Now, if you do student accommodation, often it does have its own, like, consider it as like short-term stays. It's more of a commercial premise. So often, uh, from what I've seen, banks could just be very amenable to that or not. Um, it's more of a commercial investment instead of just, I've got a small apartment next to the university, which isn't like, it's just a standalone normal apartment compared to the one across the road where it's a proper known as student accommodation.
Right.
So
Cool. All right. So stay clear of very small apartments, I guess.
I would definitely do that. And they don't really grow in value
Yeah, they
fundamentally
don't.
worse.
I mean, I think a lot of people are attracted to them because they can yield really well. Like I see so many people,
Mm,
buying these because it's like, oh, 9% yield, 8% yield, and it's like, how can you go wrong? But I mean, not to go into a lecture about investment principles, but yield is great, but unless you have that thing grow over time, then the cash flow from yield is quite insignificant compared to hundreds of
yeah.
thousands of potential lost capital growth. But anyway, that's a different topic altogether.
I completely agree with you. Probably the next one will be zoning.
Hmm.
And it's happened to a family member of mine. They purchased a property, over 20 years ago, and they like it's gonna change the zoning. It's gonna change the zoning. And after a long time, block away, they will change, but their zoning never changed. So they've got a big plot of land, whereas if they purchased it literally a block away, they purchased the same size land, um, it would have been rezoned and they would have been able to subdivide. So it's really imperative that people look at the zoning, especially if they're going to purchase first time around.
Right, right. And how do you, from your experience, is there any way by which people can buy in the right areas that are about to be rezoned? Like, how do we find that information out? Is there any tips that you have?
Well, you're asking me to look in my crystal ball. I'll try my best.
Putting you on the spot, I
um,
know.
yeah, well, I can say, like, let's say if you have a land parcel very close and like to the middle of the city, and it's quite large, you would like to assume after a while that it would be rezoned.
Hmm.
Because often councils want to allow for multiple lots or subdivision to get more properties in.
Hmm.
But if you've got a property that's like on a the thing about it, if you've got a property like backing onto a major freeway, there may not be that much desire to rezone it. It's really dependent upon each council.
Hmm.
But if I had 1,000 square meters in South Yarra or Port Melbourne or Toorak or anywhere in the middle of Sydney, I would like to think that there's a good chance it's going to be rezoned. So you've got to be intelligent with your purchase and do your research.
Yeah. No, I don't think anyone really knows perfectly unless they have insider information, have mates working at the council, etc. But yeah, I mean, like, being close to, I guess, key job centers or retail precincts sometimes helps as well, but it's a little bit risky
Yeah.
as well because the closer you are to a more noisy, hustle bustle area, then there's
Mm.
downsides that come with that as well, not being a quiet neighborhood and all that kind of thing.
Yeah.
So you have to be clear, I guess, on what strategy you want to deploy. I do want to go to the things on the opposite side of the spectrum, things that people should look out for when trying to consider how they may do the right thing in terms of buying in the right area and how to improve the value of the house. But keeping on the negatives just for one more second, in your experience over a decade of valuing houses, is there any kind of howlers or is there any like anecdotes or any kind of examples where you're like, people just shouldn't buy in this kind of area or they should just not do this?
Um, yes. I think the first one comes to mind was probably about a decade ago. So I'm originally from Western Australia, and I began being a property valuer when the mining boom was probably at its peak. And so people were purchasing properties just everywhere. They were like leveraging so much, borrowing like probably they might have sold 400K beginning of the year. And they were willing to pay 1 million for it. So I thought the rise is going to keep going and going. So when you think of it, I think of that as being hours because whatever goes up has to come down. So if you're starting to see media reports saying, "Oh, this market's cooked" or whatever, of course, do your own research, see what you know. But if there's a general sentiment that good times are going to go on forever, just be prepared for the absolute downfall. So
Hmm.
we saw valuations back a decade ago where we put the appropriate risk ratings for market direction, saying, "Hey, it's overheating. It's completely overheating. This
Hmm.
is probably not sustainable." But people just went, no, 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 I know what I'm doing. Don't worry about it. And
Yeah,
they would invest so much money, and those properties went down an incredible amount. So
yeah.
that sticks out as the biggest power that I can think of.
Sure, sure. I've heard that as well with some locations just after the COVID boom where they'd gone up like 70-80% in just, like a couple of years or 2 or 3 years. And I heard as well some banks sort of put a higher risk rating on those areas where it's like, something that's risen so fast, so in such a short period of time can't go on forever. And also I heard in places like Harvey Bay in Queensland,
Yeah,
some banks were putting a risk rating on because at one point, I mean, I think we started, not personally, but a lot of clients had bought their 2019, 20, maybe even 2021, and it had done well. But I think around 2022, early 23, there was still a lot of interest. We'd stopped buying by that time, but a lot of banks weren't really lending there anymore because the lion's share of property transactions were done by interstate buyers. And I guess, I mean, you know
right.
more than me, I guess that's also a red flag for valuers where it's like, well, it's not locals that are buying this anymore. It's all people interstate. So money that comes in can easily go out again. I mean, am I just making that up from what I heard, or is
No,
that
no,
a
no,
real
you're
thing?
not. You're not. I mean, as you always say, there's markets within markets, and if there's a lot of interstate investors going into a market, they're going there to make a profit.
Mhm.
And argument's sake, they invest in a place where there's a type of mine that's blowing up and a lot of people. But as soon as that goes down, they're going to withdraw all their money and
Yeah,
put it somewhere else. So yeah, if there's a lot of, and I think that's what we're seeing in Western Australia at the moment. There's a lot of interstate investors, and I promise you, if that market goes down, and I really hope it doesn't, uh, people will be putting their money elsewhere. So it's a consideration that valuers absolutely think about, and I have no doubt banks look at as well.
definitely a risk. Yeah, I mean, I get so many questions every day of people who feel they're priced out of Perth or it's too hard to buy in Perth, and they go, like 200 kilometers north or south or these kind of regional
Yeah,
areas just because they want to get on that WA bandwagon, and it's like, just look at the last 10 years. You just want to tread
yeah,
carefully. I could be completely wrong, but I mean, be low risk in the way you approach things, and don't just buy an estate because everyone else is buying. But I mean, like as you said, markets within markets as well.
yeah.
All right, let's go to the positives. What are some of the things that people should have as the North Star when trying to select their properties?
Um, it sounds weird in this day and age, but land size. There's a rental crisis. People are trying to get a house, and if you've got a house that's got a larger land size than maybe your neighbor, over a period of time, it the value will hopefully increase more. So you can get a lot of. This isn't financial advice, but you can probably, if your house goes up quite a lot, it's mainly due to the land value. So if I could buy the biggest plots of land in the middle of Perth or middle of Melbourne, middle of the city right now, I would do that in a heartbeat because in a while that's going to be a high value. So if people are looking for a house and they can afford a large land parcel, I would, if I was in your shoes, that's probably what I would be doing.
Yeah, that's great advice. I think once again, not to be a downer, but I think a lot of people, because of FOMO, they can
Mm,
just settle for like, oh, it's a relatively new or brand new house. It's 350 square meters. Let's just get a foot into the door of the property market or, something like that. But I think it's really
yeah.
important to step back and take stock and be like, all right, even if the house, needs a little bit of work, even if the house isn't perfect from a cosmetic perspective, that can be fixed. But if it's on
Mm,
7, 8, 900,000 square meters, that's there forever, and they're not
that's there
making
for
any
it's not
more of
going
that.
away. Yeah.
Yeah,
Um, it's I can't think of anything like I should rephrase that. Improvements depreciate over time. Whereas the land, unless there's a chemical spill or something, it's not going to depreciate.
yeah, yeah,
It's most likely just going to increase in value. So the more square meterage of land you have, probably the better it will be.
yeah. Awesome, cool. What's another one?
Um, I found this really prevalent once I started valuing on the East Coast. It's actually car accommodation. It's so hard, and I think this is really a big thing in Melbourne. I don't know how it is in Sydney. I'm sure it's the same. But if you've got a double garage, that like, and you're really close to the middle of the city, like that is people pay extra just to have the double garage. Even if they've got one car, they've got storage or whatever.
Hmm.
Um, and you look at apartments and houses that just do not have car accommodation, and they generally don't do as well as car houses or apartments that do. There could be a maybe 30,000, $40,000 difference. And who knows what it's going to be in 10 to 15 years' time in those inner city places.
Yeah.
One thing I do know with Western Australia is it's public transport's not that good. So everyone drives around in cars. You've got to have a garage. You've got to have a car. And people
Yeah.
have boats and stuff. They want to have space to put that stuff in. So if you don't have a property which doesn't have that car accommodation, then it's probably not going to be fortuitous to you in the long run.
Yeah, fair enough. I mean, I know there's different locations across Australia and different demographics, and the accessibility of public transport, as you said, is different. But we go down to Melbourne every year in January for the Australian Open, and we always hire an
Nice.
Airbnb in like Hawthorne area. Oh, not Hawthorne, Richmond area, which is like
Yeah,
walking
nice.
distance. And there's never like any car garage space, and we always hire a car
Yeah,
because
there's
we've got to
not.
sit in. And it's like, I mean, I'm sure I'm just being a little bit entitled here because I'm from Queensland, the land of like garages. But it's like, yeah, you can't always find a space in front of the house. You could sometimes you have to walk like 20 meters, and if you got like groceries and stuff. So I
Yeah,
don't know how they do it. Maybe I'm just being a bit soft, but from that perspective at least, yeah, parking spot is really good.
yeah. It blows my mind how like sought after parking places and things are. Probably about a year and a half ago, there was a garage that sold and secured up. Literally just a garage by itself. It's like $167,000. Or like, oh, just like,
Yeah.
why? Like, this is ridiculous, but people
That's
pay for it.
crazy.
So it's
Does it matter
impressive.
from a valuation perspective whether it's a garage or like a carport? Is that a thing?
Really good question. So probably not too much. However, you've got to building a garage costs more than a carport.
Hmm.
So the the rate per square meter would be more. So and people for safety purposes and storage purposes probably just go, well, if you've got your car in a garage, it's more it's nicer than just leaving your car out in the carport, which the door may not come down.
Hmm.
Someone could potentially rob it or snoop around. And so you've got to look at, would you prefer a garage or a carport? Personally, I prefer a garage.
Yeah. Uh, yeah, even like where I live, maybe I just don't understand things, but there are like some really nice houses that have gates, like automatic gates, but then
Mm,
they've got like a carport. And so if it's like raining or hailing, if the rain goes sideways, their car still gets wet. Whereas we have a
yeah.
double car garage. So I'm always like, I mean, would a valuer, if everything being equal, would a valuer value the double lockup garage more than the carport, even if it's behind automatic gates?
What would you prefer, carport or garage?
Yeah, 100%, right? I
I
mean,
prefer garage. So,
yeah.
yeah, you've got to look at what someone who's buying a house today would prefer. If you've got land parcel saying, property saying, well, the only difference is garage or carport.
Yeah.
You prefer the garage. That's what I know I prefer.
And I think that's a really good point. Valuers are also people. And, if you think something
Mm,
is an issue, then every chance that the valuer will also think it's an issue and it will play on their mind and they may just pop down the value a little bit.
yeah.
Sometimes people ask me, oh, there's this like, the green box in front of houses sometimes, like to do with the what's it called? Like the transmission or like an
Okay.
easement or something like that. And they're like,
Yeah.
or maybe it's in a park, there's a big power box, the green box thing in the
Mm.
park opposite a house. And they're like, oh, it's a bit unsightly, but would this reduce the value of my house? And I always think, well, not really, but if you're thinking about it, then a future buyer is probably going to be thinking about it. And it's that sort of flow-on effect. Is that the
You've
right
put
way to
that
think
correctly.
about it?
You've put that absolutely correctly. Yeah. It's I couldn't have said it better myself.
Okay.
Yeah,
All right, we'll leave it there then.
leave it there.
Okay, well, I think we've got maybe two or three left. What are some other things to look out for?
Probably overcapitalization. So I go through houses and I know other valuers who go through houses and people are very keen to tell you, oh, I spent 30K on that, I spent 40K on that, I spent 5K on that. And you go, okay, that's great. But as an overall snapshot, is that going to increase your value? So argument's sake, your house is $500,000 and you've put a new $30,000 kitchen in.
Yeah.
Is your house going to increase by 30K? Sometimes yes, sometimes no. And it's really important to just really think about your types of improvements that you put in. Um, it sucks being a value when you've seen someone who's really put their heart and soul into the house and they've put
Mm,
money in it, and you go, hang on, compared to the market today, I know this isn't, it's not reaching the amount that you put in. You've
mm.
unfortunately maybe overcapitalized just by like 20K or so, but that's not going to get you finance something. You just go. So it's really, if you want to do renovations, compare it to the other properties that are sold. And yeah,
Awesome. It's a good call out. And I think it's another reason why, as an investor, you really want to take the emotion out of a buying decision because you may see the kitchen
mm,
and might have like a really thick stone bench top and you might be like, yeah, that's really cool. But none of the tenants or none of the potential future buyers of that house in that demographic in that suburb may really care about that. And so you've just bought something
exactly.
that you care about, but no one else cares about it. So the value doesn't care about it. So it's like it was
Yeah,
useless, right?
yeah, exactly.
Okay, and you've got one left item on the positive sides of what to look out for. What's that last one there, Tim?
It's I've been wanting to say this for years. It's presentability.
Okay.
Um, if you've got someone who's maybe thinking about your financial future or whatever, and they come into your house, make the place kind of nice. Um, we doesn't have to be like rental application clean, but if it's like dirty and smells like beer bottles everywhere, you got to evaluate things. How much would this property sell on the market? Literally today. Um, I think we've all been through rentals, or like if we want to rent a place or we want to purchase a place and it doesn't present well, we just go, "No, I don't want to buy this. I don't want to live here. Who
Hmm.
would want to live here?" That dictates the price. So yeah, and just be nice to your valuer. They just want to do their job, and we all feel weird going to people's houses, but it's something we've got to do. So, I just want to leave you on a very funny note. So years and years ago, I went to a house and I knocked on the door, and there was a guy who had like a curtains. So I saw a cat. I was like, oh, okay, cool. Looked down again, and there was three cats, and I was like, "Hmm." He opened the door, and this waft hit me, and it was just cat pee and
Oh
fur and
no.
everything. Went in and I was crying because it was so strong. And then I said, "How many cats do you have?" And he said, "Oh, I've got 17. Don't tell the landlord." But you got to think like that's going to affect the value.
Yeah,
Like,
that'll do
who's going
it.
to want to go? Oh, that house, 17 cats in it. Yeah, yeah. I'm gonna buy that. It's a good investment. It's not. So just don't let your house just be an absolute pigsty. That's what it's like.
That's so funny. My grandfather used to be a valuer and he used to tell me, I don't know if it's like it was a joke or whatever. He used to say, before a valuer comes to a house, bake a fresh loaf of bread. And so by the time he comes, it feels like homely, like,
Yeah.
cozy, comfy, yummy, and the guy is gonna love it and he's gonna give you another 50K on the house.
um, I can't confirm that, but if we walk into a place that smells like cookies, I don't think anyone's going to be complaining.
No, no, it depends on what you like, right? You have something by which you can, how do you say, show a bit of favor to the
Yeah, yeah,
valuer.
yeah, yeah, yeah.
No, that's awesome. Maybe before we finish off, I just want to ask one question because I know a lot of people will
Mm,
be asking or thinking about it. These days, on the face of it, for the everyday investor in residential real estate, it doesn't seem that like valuers have a big place or big role to play. And where I'm going with this is, if you go with CBA or some of the big banks, it's like they have their desktop valuation technique. CBA have like the biggest loan book in Australia, and they use Core Logic and they use their own comparables. And is it fair to say, like most of the times, these banks, they don't even use people like yourselves? Maybe that's a completely incorrect statement, but that's what it sounds like, seems like. And they just have these desktop valuations, and most of the time, unless you've done a terrible job, they come out pretty close to the purchase price on the contract of sale, and Bob's your uncle. Like, is that a completely unfair statement? And what do you think about that?
just to tail onto that, in your group, I see so many people going, CBAs, they're known for valuing low. You got to go NZ or the other bank
Or
or
high,
something.
yeah, what vice versa,
So
whatever, yeah.
honestly, like if people knew the process, they wouldn't think that. So, uh, with I'll just leave it. The question that you asked me is, I disagree with it because a lot of the banks they have valuer panel firms, so they go and do the valuation themselves, independent firms. So pretty much every 90, oh, I personally think, and I can't speak for the banks, that 90% of valuations head to valuation firms and they're done. So yeah, and it's done by a human. Unless yeah, so it's done by humans. So it's not just computer generated all the time. We need a valuer. You, industry needs actual valuers to go, hang on, what is this property? Oh, is it still the same? What are the legal requirements? Has there been a railway line put behind it? Is that going to affect its value? So yeah, this the sentiment that it's all just like computer generated, not applicable, especially in Australia. In places like Singapore and Hong Kong, it is because every apartment is literally the same. But in Australia, it's very different.
And do you feel this just sparked another question? Do you feel with the rise of artificial intelligence? I mean, no one likes to talk about their profession being taken over by robots, but I think in places in sectors like information technology, maybe accounting, bookkeeping, maybe others, it's a real threat, Maybe not in the next 1 or 2 years, but in the long term, that AI could do a lot of what humans are doing. Do you guys as valuers think about that or you talk about that, or is that like a risk to the industry? What's your perspectives on that?
This has been talked about 10 years ago that the
Yeah, right.
robot's going to take us over, and we're all still here. You need banks need eyes on the ground. They need people to see to them what actually it is. So if there's a very expensive property, they will pay someone like myself to go and look at it. So not worry about it. If it happens, I will. I'm not a betting man, but I'll buy a lot of people a coffee. So I don't think it's going to happen.
No worries. Well, I think personally, the more humans are involved, the better from a checks and balances perspective. And that's just one of the things that makes the Australian housing and banking system so robust and strong. Because we have valuers, because we have, relatively low debt levels from an LVR perspective nationally, because banks lend prudently, we don't have the
Mm.
subprime stuff going on like what was happening overseas more than a decade ago. So all of this combined is actually a good thing. But I really appreciate your time, Tim. Like I said at the start, never had a valuer on. I hope people will have, the curiosity and the intellectual sort of curiosity to understand these points. And of course, you only mentioned 10. There are so many others,
So
and they're all equally important. So I appreciate it. Was there anything lastly that you wanted to say before we finish up?
thanks for your time, and everybody. If you have a value in the house, be nice to them. offer them a cup of tea. Most likely they're just going to rush through and say no, but I'll appreciate being thought of. So
Awesome, awesome. And everyone's watching or listening. Tim is in the Facebook group, so I'm not going to tell you to go off and rush and contact him, but he is there.
I'm
And so
gonna
if
get
you have
bombarded. I know.
okay, don't contact him, but he is there anyway, just in case you want to ask any questions or anything like that. No, that's really cool. Really good to chat with you, Tim, and yeah, I really appreciate your time.
Anytime, BK. Thanks for your time.
Thanks, guys. Thank you for being with me as always. Hit the subscribe button, give it a like, and I'll see you next time. Thanks so much. Bye.